What I want to touch on today quickly is borrowing to invest. It's a conversation that we find we're having a lot more frequently at the moment because the interest rates in Australia are so low at the moment. We've never had interest rates this low. They're currently at 0.25%, and there's even talk that they might go to 0.1%. Now, when the RBA cash rate, or the country's interest rate, is low, it generally means that banks are reducing their interest rates as well. Or really what it also means is the cost of borrowing is lower. So lower interest rates means lower cost of borrowing. Now, when you borrow money, you can do it for two purposes. For personal reasons, so to buy a car, a house, furniture, whatever it might be. That's debt that you have to repay using after-tax money. Or you can borrow for investment purposes. So if you're borrowing to invest in assets, whether it be a residential property, a commercial property, shares, whatever it might be, if you're borrowing to invest in those sorts of assets that are going to produce an income for you, then you're allowed to use your pre-tax money to make your interest repayments. So once again, that reduces the cost of borrowing even further because you're using before tax money to make those interest repayments. And that comes via way of a tax deduction. So what we're looking at is borrowing to invest can be really beneficial because it gets you into the market earlier, and you can benefit over the longer term from this kind of strategy if the rate at which your assets are growing in value is greater than the cost of interest. So as long as it is growing at a greater rate than what it costs you to enter the market, then you can benefit from a borrowed to invest strategy or a gearing strategy. Now, there's obviously more risk involved because you're not just using money to invest, you're actually using someone else's money to invest. So you're borrowing that money to seed the portfolio or the property. So you need to understand the risks involved, but when rates are as low as they are, it becomes a much more attractive proposition. So if you want to know a bit more about it, or if it even fits into something that you want to do, please reach out and I'm happy to explain a bit further. Or if you have a financial advisor already, speak to them and see if it's suitable for you from their point of view as well. So yeah, don't forget to connect up and subscribe to Simplifying Finance on Instagram and YouTube. And look, I hope to bring you more content soon.